Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is February 27th, 2019, and tonight I'm going to talk about gold. There's a couple of different ETFs that you can trade, but I've got GLL on here because the system is actually short right now. This despite the fact that the trends, short, intermediate, and long term, are still pointing to the upside. There's some indecision that's going on here where we have the technical rating, which is flat, and we have the seasonal tendencies pointing to the downside. And we just broke through some major support. So that's really going to be the emphasis tonight. And then when it comes to some of the other tools we have here as far as the pro alerts, on a daily bar basis, we had a pulse, which was a reversal type indicator. You can see the reversals. We've got 4 of them here. And we had a reversal that triggered 3 trading days ago. And on a weekly bar basis, we've just recently had a major surge that just triggered here as well. On this on a weekly bar basis. So there's enough indication that the breakdown that is taking place here, and I'll just pull up the chart here for gold. So here's gold. These are daily bars, and this level of support, at least that was support, you can see that we broke through that today, and that was the same resistance that we talked about not too long ago that we wanted to have a little break above, and this one bar we actually did pretty well on, and then the market started to reverse course. So we actually liquidated a couple of positions today, in part because of this breakdown of this support level. I'll just give you that number here, 1329. That's what that level is right through there. You can see we're at 1321 right now. The way I'm looking at things is that anytime you break a resistance or a support level, you immediately start looking at what's the next level. It's not to say that it will immediately go there, but the next level, if you just kind of look at this level right through here on daily bar basis, that's 1210, basically almost 1211 on the this support level. And what you're going to find is that it's very similar, or very close to that of the 50-day moving average if we take a snapshot right now. Now, this support level is not going to change, but the moving average obviously is going to continue to the upside. So I would suspect that there's going to be an intersection, at least on the low bar basis of where the market might be headed. Just simply look for the 50-day, and that'll probably give you a better indication than would be the that level, this support level that I was just referring to. So just something to look for from that side. Now, a couple things to be aware of. First thing is that gold, there's a number of markets on the top 10. Here's gold. It's not the top market, but it is certainly there and has a high level of correlation between the current year as well as multiple time frames, 5, 10, 15, 20 year seasonal charts. So what I've got here is a seasonal chart. Here's a 5-year, and we'll look at a couple. Here's the 10-year. I'll just start here. You can see that the accuracy is there, that it takes a little while for it to trigger. But with the market starting to peak out here, that the strength that was there from a seasonal basis is no longer there, and that there's more of a sideways to downward bias on the 10 years, and you'll see on the 5 years it's a little more pronounced where there's a little more of a sell-off. So that's what's leading the indicators, the seasonal indicators, to really point to the fact that they're more negative than they are bearish, or more bearish than they are bullish. Now, where we stand right now is that the systems are short, and we just liquidated 2 long positions today with a nice little profit in that side, where we're basically, if I can find it here, yeah, they're up around $2,300 on their trades. But from this perspective, we've got 2 systems that are short, 240-minute, 120-minute. One is a pattern-based, one's a trend-based. And so from that perspective, we're obviously looking at things on the short side. I'm just going to quickly pull up the trades list where we list all of the trades for the day. We have the entry trades and we have the exit trades. And I mentioned that we liquidated 2 gold positions today. Here's the Betelgeuse systems in this this case, we had a 45-minute bar system and a 240-minute bar system, and they liquidated it earlier on the day. So these were both short systems, or excuse me, they were both long systems. And from that perspective, we're starting to hedge and protect ourselves a little bit on having made some halfway decent money on the long side. But things are doing this about face in part because we did break below that support level to the market. So for all intents and purposes, I would be looking at this key level right through here, this 1329.10 level, this one right through here. That's going to be the key level as far as legitimate support and resistance to the market. And I'd be watching. I just love some of the moving averages just for targets. I'd be watching the 50-day moving average in this case, only because of the fact that it's kind of coinciding with this particular indicator, this particular support level to the market. But as I mentioned before, it's going to subtly change and still going to rise here for a little bit, and perhaps the market will actually sell off. We'll be able to make a little more money on the short side. Then we'll base, and then we'll sort of take a look at the market again for any type of opportunities from that side. So with that, I'm going to point this out just very, very quickly. I go through all of this information here on a regular basis as far as all of these headers up here. There's a lot of information that's housed just on this table. And so to make this a little bit easier, what I've done, and I mentioned this last night as well, that if you come to signals, deep dive analysis, and then come to our deep dive cheat sheet, what you'll get if you fill in the information is you'll get this little guide here. I think it's like 5 or 6 pages, and it goes through all the different sections in the deep dive analyses page, specifically this page right through here, and talks about what the indicators are and how they combine together to give us a clue and an indication. So I'm just going to point this out. The trend is to the upside, but there's differences when it comes to the technical rating and the seasonal tendencies, as well as the support level that broke. So the combination of a trend headed higher, but ambiguity when it comes to the technical rating and the fact that the seasonal tendencies are to the bear side, then we're going to actually be looking at something that's going to be a little bit different. We'll take a look at another market tomorrow and kind of go from there. Thanks very much. Bye-bye.